What's going on, everyone? It is Paul, the 920 trader with 920 trading. If I told you that about 65% of all retail trades were profitable trades, would you believe me? Well, it doesn't matter if you believe me or not. The reality is about 65% of all retail trades are winning trades. But you've also heard the statistics, and this is accurate, that only somewhere between 5 and 10% of all retail traders can make a living through day trading or with day trading. But how can that be? How can there be such a massive divide between profitable trades and profitable traders? Well, the reality is, the simple answer is, retail traders do one thing really, really well and one thing really, really poorly. The thing that retail traders do really, really well, I mean, they're champs. They're really, really good at this. They hold on to those losing trades. They hold on to those losing trades a long time because they hope that the trade comes back to pick them up. They haven't predefined their risk. They just hope, you know what, it's going to come back and pick me up because it did it before. It did it before, so it's going to do it again. And every now and again, that happens. So they're really, 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 really good at hold on to those losing trades. As a matter of fact, they hold on to those losing trades and then add money to those losing trades. But what are they really, really, as a general rule, what is retail really, really poor at or poor with? Well, you guessed it. It's actually the opposite of what they do really, really well. They don't have the ability, or they have the ability, but they do a very, very poor job at holding on to their winning trades. As a matter of fact, that's the one thing that's going to separate the highly profitable trader from the trader who is not profitable, who will never be able to rely on the money that they take out of the market to make a living. That's just the reality, folks. Most folks, retail traders, are really, really poor at holding on to their, you see it every day, folks. You see it every day. The question is, why? Well, there's many reasons, and most of those have to do with your own emotions. Number one, holding on to a winning trade is not natural. There's absolutely nothing natural about holding on to that winning trade. Why? Because we're risk averse. Generally speaking, we are risk averse. It's like, okay, there's a little bit of green in the account. I'm going to go ahead and close the trade. And then here's the conversation you have with yourself to justify getting out of that winning trade. Well, you know what? I secured my profit. Nobody ever went broke taking a profit. So you know what? That's what Warren Buffett said. Nobody ever went broke taking a profit. So I'm just going to go ahead and close the trade while the trade goes without you. It just goes and it goes and it goes. It's like, okay, and then a little while later you say, why did I close that trade? And again, then you rationalize it. Well, I was fine. I made my money for the day. I don't need any more. I don't need to be greedy. But at the same time, you're going to hold on to that losing trade. Hold on to that losing trade. So you have all these big, big losers. You have these small wins, and it's no wonder your account goes down and down and down. And again, folks, the reality is, if you can't hold on to your winning trades, you will not make it long term. And you will not take the money out of the market that the market allows you to take out of the market on a regular basis, folks, on a regular basis. So other reasons why people do it, and it's all based on fear. It's fear. It's fear of giving money back to the market. It's like, okay, it's green. I'm fearful that I'm going to let this green trade turn red, or I'm going to give back some of my unrealized gains. Folks, they are unrealized until you close that trade. It's not your money until you close that trade, folks. It might appear as though it's in your account, but it's not. It's not in your account yet. So quit doing that. So the reality. So how do we keep from closing the trade when, again, our emotional mind, our emotional brain is saying close the trade, close the trade, close the trade? How do we do that? Well, number one, we have a plan. You got to have a plan, folks. That's where it starts. It starts with your written plan. It's got to be written. It's got to be specific. It's got to be black and white. There can be no room for kind of a little wiggle room. There cannot be any gray area whatsoever. Your plan has to say specifically, under these certain market conditions, I'm putting on the trade. I'm getting into a trade. If you miss it, you leave it alone. Now, once you're in that trade, what does your plan say about staying in the trade? It needs to say something along the lines of, under these certain market conditions, I'm going to take my trade off the table, secure my profits, or get out of a trade that's going against me. Those are the two things. But again, they must be very, very specific in what you're trying to do, folks. Again, your own emotions, that's a bad reason. Number one, it's a bad reason to get into a trade, and it's a really, really bad reason for taking yourself out of a profitable trade. How many times, and I know the answer because we've all been there, how many times have you been in that winning trade and you say to yourself, I got to secure the profit? So you close out the trade goes against you, and a couple of things happen. You go, why did I close that trade? Well, I mean, why? Well, what's the purpose? Is there any specific reason that I closed the trade other than my own emotions? I'm not going to do that anymore. I'm not going to do that anymore. Okay, great. So what if it just keeps on going and you don't get another opportunity to get back into that trade? Those are realities, folks. Sometimes the market just goes in your favor and there's not another opportunity to get back in. So what do a lot of people do? Well, you know what they do. They chase. We're not dogs, folks. We don't eat out of a bowl on the ground on all fours wagging our tail. We don't chase. Dogs that chase eventually get run over. We don't do that as retail traders. Now, again, most people do it, but don't enough with that. If you truly want to be a profitable retail trader in the long term, you can't chase trades. Everything you do must be according to your trading plan. And again, it can't be based on your own emotions. A couple of things that will lie to you all day long. Your own emotions will destroy you as a trader. We're emotional beings. That's the reality. But we have to separate our emotions from what we're doing, which is just watching lines on a screen. Folks, that's all we're doing. We are just watching lines on a screen. That's it. The second thing, your P&L. Your P&L is a liar. This business is not about the P&L. This business is about the process. And the sooner in your trading career that you understand that this is all about process, the better off you will be as a trader. Guys, it's all about the process. It's just not, we're just watching lines on a screen. You can paper trade all day long and do very, very well because there's no emotions involved. But you got to put real money on the line to get those real emotions, kind of in the game, if you will. But again, folks, plan. Quit taking those profits too soon, folks. If you truly want to be that long-term profitable trader, let the market decide when you get out. You're going to get, generally speaking, three or four really, really good signals. Your plan will present itself, or your edge will present itself 3 or 4 different times during the trading day. Let's take a look at a trade yesterday. It was pretty early in the day, but I was looking at this trade and I thought, you know what? Kind of looks like a good trade. Now, before I ever get into a trade, because everything that I do with my group. So I tell my group specifically and exactly before I'm getting into a trade. Several minutes before I get into a trade, I say, this is what I am looking for. These are the certain market conditions that will get me into a trade. Absent that, I'm not putting on the trade. So I'm looking for green lights. So I'm looking for 9 and 20 involvement. I'm looking for a major level. I'm looking for basically, what's the market doing during the day? Is it going up? Is it going down? So in other words, it's just, the trend. What is the trend doing? So again, this is Thursday. This is Thursday, the 12th of June, 2025. So again, pre-market, we kind of ran back to the upside in pre-market, found a pre-market low, 597.59. It ran up, got to pre-market high. Okay, that was it. It established pre-market high. And then what did it do? Kind of pulled back coming into open. So here's exactly what I told the group before I got into this trade. I said, guys, here's exactly what I'm looking at. I'm looking at see if we can come down and, take out VWAP. See what VWAP looks like down here. Now, we had what's called the POC. It's the point of control, the daily POC, the point at which most money on the day had been traded up to this point. And it was right around in here, right around, let's say $600 even. So I was looking for, and I told the group I'm looking for a double cross to the upside, but I'm looking, as long as we're above VWAP. So I'm looking for a double cross to the upside. That is a candle that opens below the 9, closes above the 20 with the POC. So again, we have 4 things that are happening on the same couple of candles. So number 1, we're above VWAP. There's one green light right there. Number 2, we're above the 9. Number 3, we're above the 20. Number 4, we are above the POC, and you can't see the POC. This is based on yesterday's price action. But this is what we're talking about, and this is how I do it again every single day, folks. So double cross to the upside. It's actually a golden cross, 9, 20, and the POC. So there it is. There's the entry right there. I told everybody exactly what I was looking for. I executed based on that. Now, how do you let that trade run? How do you let that trade play out to its natural conclusion? Okay, let's make the assumption that we're just looking at this thing coming from a 1-minute candle by candle by candle basis. Well, okay, got this candle. It appears to be, at least a moderately decent entry into the play, and it was. And it ran up and it ran up and it ran up, and we kind of had a little bit of problem right in here at that pre-market high. It tagged it. It came back down. We touched the 9. So for me, that said, okay, I'm still good in the trade because I'm using that 9 as support. Okay, now please pay attention to the time at which we got into this trade, 9:38. And remember, folks, I'm telling the folks before I get into the trade and then I execute. No hesitation whatsoever. So it ran up and it ran up. Now we got through that pre-market high, and then we had a shaker outer candle in here. And I don't mind showing the entire play. Had a shaker outer candle right in here at 9:55. So it's before 10 o'clock. Well, it was pretty close to closing me out, but I knew that I had 1-minute support. I had 1-minute support right here at this level, $600.43. Most people, what they're doing on a double cross back to the downside, right in here through pre-market high, because pre-market high to pre-market low is a thing. And trust me, I was getting ready to close out this trade until, again, we found support and started pushing up again. So that said, you know what? You're at least safe above that $600.43. And again, I'm not going to go into all the technicals of every single trade that I do. That's a colossal waste of time. If you're interested in live daily trading, where we do this every single day, you guys know what to do. The link for that is down below. So anyway, we found support right here on the 1-minute. We were also using support on the volume profile. So it will show specific shelves. So at this point, what are we talking about? Well, we got these candles right in here at 9:55, 9:38. We've been in trade for about 17 minutes. It's doing a little bit, not much. It pulled back, kind of a nasty little pullback. And then it pushed up again over that pre-market high. It was actually a fresh cross in here because it kind of consolidated for a few minutes. And then what did it do? It just ran and it ran and it ran and it ran. This was the plan. The plan basically said, hold on to this trade until the market tells you the trade is over. So the market at this point, I was looking for this midline up here. The market at this point kind of said, you know what? We're kind of breaching a little bit of support that I'm looking at. And guess what? Closed out the trade, had a couple of red candles pushing down below, and I said, you know what? I'm getting out of the trade if I breach this level of support and a level of support that I had on the POC or on the volume profile. So it's right there. That's the candle that said, you know what? This trade is over. Now, I don't have the ability, I'm doing this in real time, so I don't have the ability to see candles that are not yet printed. So in my mind, I'm thinking that could possibly be an entrance into puts. So there's no reason I want to stay in calls if there's a potential entrance for puts. And a couple minutes later, we kind of reconfirmed back into that trade. I took that, 3 candles in, had this, a push through. And then what happened here? Well, it's a losing trade. I mean, that's just the bottom line, folks. And again, how do you stay in the trade? You have a plan. This was my plan. This was my plan. So you had a really, really nice winning trade in here. And then a small loss right in here, folks. And see, here's the thing. It doesn't matter. Your wins and losses don't matter. A singular win doesn't matter. A singular loss, that doesn't matter either. The only thing that matters is your ability to follow your trading plan, whatever your trading plan is. And it's got to be, again, specific. So other reasons for not staying in those trades, FOMO. I mean, FOMO's still a real thing. FOMO's still a real thing. Yeah, it's fear of missing out. Kind of in the reverse, you get that really, really good entry. So right in here. You get this really, really good entry, double cross to the upside, exactly what we're looking for, right? Oh, it's a double cross. It's actually a golden cross to the upside. And then it starts cruising along and it's doing really, really well. And then you get this candle right in here, this red candle that comes out and you go, I got to get out of the trade. And then you close out the trade. That's that fear. That's that fear that you're going to give back money to the market. Money that's, yeah, it's unrealized gains. But I understand closing your trade out, somewhere in here. Makes sense. Makes sense. But at the same time, if you want to be a long-term, consistent, profitable trader, you have to get past your fears. It's all about closing trades. It's all based on fears. It's all based on fear. Most of the things that we do from a trading standpoint, most of the trading errors that we make are fear avoidance. So again, folks, when you're in a trade, let the trade play out. I mean, also look at a higher time frame. What does your higher time frame tell you to do? Well, right in here, well, look at the 5 minute. Again, look at this. This is, again, based on the 12th. This is that time period in here. We're getting into the trade right in here. Look at your 5. 5 minutes says, you know what, we're still good. Why not trust a higher time frame? How about the 3 minute? What does the 3 minute look like? Well, okay, it's kind of that same thing. We're still good. We're still above the 9. We're still above the 9. And again, now here's the thing. If you have, let's say, an average hold time of, I don't know, 3 minutes, 4 minutes, 5 minutes, probably not that long. The average retail trade is really, really short. But let's say you have an average hold time of just a couple of minutes. How do you go about holding from just a couple of minutes? How do you build up? Well, you do it over time, folks. You can't do it all in one fell swoop. If your average hold time right now is, let's say, 3 minutes, you're not going to be able to hold on to a 30-minute trade. From an emotional standpoint, from an anxiety standpoint, that is really, really, really going to hurt you. So again, we have to do it a little bit at a time. So yeah, just the key to trading is getting a little bit better every day, holding on to those winning trades just a little bit longer and a little bit longer until you can hold them until the market tells you to get out. And again, that's the key. That's the key to the long-term profitable trading, is being able to do that. Another thing, folks, a lot of people seem to want to go a little bit too fast. We'll tackle that in one of the next videos and one of the next newsletters. But hold on to those winning trades a little bit longer and a little bit longer and a little bit longer all the time, folks. So that's about all I got for the day, folks. I hope you guys are having a great day. Above all else, folks, I hope you guys are following your trading plan, and I hope these videos are helpful to you wherever you are in your trading journey. So yeah, that's kind of all I have for the day, folks. So you guys know the rest. If you like our videos, please go ahead and like and subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content. Also, leave us a comment. That is always greatly appreciated. And share with your friends, neighbors, trading community, relatives, everybody out there that you believe could benefit from what we're doing here at 920 Trading. Go ahead and share. Now, if you are interested in live daily trading, because we're traders, guys, we trade. If you're interested in getting a little bit better, marginally better every single day, just a little bit, just a smidge, just a skosh. If you're interested in getting better every day, folks, and doing the live daily trading, head on over to our live trading Discord. You know what it's called. It's called 920 Trading. The link for that is down below. We are so convinced that you will find a lot of value in what we do. We are going to give you that first week at no cost to you other than a little bit of your time. Now, if you like it, go ahead and stick around. What's it cost? Hey, I'll tell you, it's $50 a month. That's it. Are we worth 50? Yeah, we'll make you a better trader. No question about that. So yeah, come on over, check us out, folks. Now, if you're interested in the 920 crossover strategy, no cost to you, go to 920trading.com. The entire strategy is there for the world to see. You don't have to spend thousands of dollars on some super secret strategy it's neither super nor it's secret, and it's not new. There's nothing new really coming out in from a trading standpoint. It's not, yeah, maybe some improved stuff, but nothing really new. Anyway, folks, I hope you guys have a great weekend. Have a great day. We're going to keep on doing this thing, folks, and again, just get a little bit better every day. You don't have to get a lot better, But by getting a little bit better every day, just a little bit, you're going to look back and go, I have come a long way as a trader. Anyway, I hope everybody has a great rest of the day, and you guys know the rest. Until next time, we will see you in the markets.